Good morning, everybody. Hopefully, y'all are having a great Thursday. We just got some economic data with the jobs reports that just came out. The ADP non-farm payroll came in much hotter than expected. Let me make sure to turn down my volume so I don't get spooked by the opening bell. But we're going to review the economic data that just came out. ADP private payroll rose to 235,000 in December, much more than what was expected. So if we go over to the economic calendar, the ADP non-farm employment change was 235,000 versus 150,000 expected. So huge change. It's a positive change. So that means that the labor market, it's still extremely hot. And the previous month for November was 127,000 jobs. So there was almost twice as many jobs added for the month of December than there were in November. And I think there's some seasonality to this. I don't think that the markets are taking into context, the spending sprees that usually go on in December with people buying gifts for their family. So I think it could be possibly an overreaction, but nonetheless, the data is showing that the labor market is still extremely hot, which means that the Fed has more to do when it comes to interest rates. So if we head over to, what is it called? The FOMC countdown tool. Good morning, Guile. Good morning, Roddick. Good morning, Aaron, UT. Hopefully y'all are having an amazing Thursday. So the odds of a 75 basis point rate hike for the month of February, the meeting is going to be on actually February 1st. I thought it was February 23rd. I guess I read it wrong. But the odds of a 50 basis point rate hike went from 30.3 yesterday to 43%. So if there's more compelling evidence that the Fed needs to raise rates, if jobs data keeps coming in very hot, if wages keep going up, pointing to higher inflation, then the odds of the 75 basis point rate hike is going to go up, which would be a completely unexpected turn after the Fed just said that they're going to slow down the interest rate hikes in December. Like, they went from 75 basis points to 50 basis points, and now if they reverse course, going back to the 75 basis point rate hikes, then I think the markets are really going to start to panic. And speaking of interest rate hikes, whenever interest rates go up, whenever yields go up, the rates go up, bond prices come down. So this makes me question my TLT trade that I had open previously, which is currently down about 36%. I spent $750 and currently I'm down by $270. I think I want to just cut my losses here because there's just more and more compelling evidence that rates are going to go up further. I do have a contingency against that because there is some seasonality with December and a lot of spending around that time. Let's check out SPY. So currently we're trading at 380.6. We're still headed down. Yeah, I think I'm going to cut my losses here on TLT. I think that'll be the first move I make. I'm going to try to close them at 14 or 15 each. Right now they're going for 16, so I don't know if I'll get filled on it. It'll be like a $300 loss, which is unfortunate, but necessary, I'll say. So I'll try to close 30 of them at 15 apiece. Looks like we just went below the 300 point. Oh, that filled right away. Jesus Christ, somebody hopped straight onto that. All right, so let me post this over in the premium Discord. And then we'll move on to my other trades that I have open, that I opened yesterday right before the close. So if y'all want to see what trades I'm making after the live session because I do trade after, obviously. You'll have to join the premium Discord. And usually I stick with trading at this first hour of the day from 9 to 11. And then I trade from 3 p.m. to 4 p.m. if I'm looking for swing trades. So if y'all want more swing trades, join the premium Discord. There's a 1-week free trial for it, so definitely check that out. Closing options alert. Premium 101. Freemium. Just cut losses on the TLT call debit spread expiring 120 at 15 each, and strike prices on this were, I think, 104, 104.5. So I'm no longer confident in bond prices going up because I think that the yields are going to keep going up and they have a negative correlation with the prices. So bond yields and bond prices have a negative correlation with each other, where when bond yields go up because of anticipated higher rate hikes, the bond prices, such as TLT, will go down. So you can look at TNX, which is a 10-year treasury yield. So this is how much money you get paid for investing in the treasury. And then TLT is the actual bond that you buy. This is actually a 20-year treasury ETF, so it's a 10-year versus a 20-year, but the long-term rates are generally around the same. Anyway, going back to SPY, currently we're trading at 380.3. I opened a put debit spread right before the close yesterday, so I want to look at the profits for that. I didn't go heavy on it, and I'm actually surprised that these are only trading at 70 cents each. That's a joke. They should be trading more. I would think that they would be trading more along the lines of like at least 75 cents up to like 80 cents. So for this one, I think I'm just going to hold and see if we can reach that. I think they're way underpriced given the price movement that we've seen so far this morning. I also opened an Iron Condor, assuming that we would be in the range between 379 and 386. I had an alert set with a 380.29 price level, and it looks like we did end up bouncing off of that. We still are bearish with a RSI, so that doesn't give me a ton of confidence. And it looks like we're going to crash right through that 380.29 level that I wanted to get out of this Iron Condor. So I think I'm going to do that now. I have just 6 of these open. I didn't put a lot of risk on this one either because I wasn't super confident. But yeah, I think momentum is probably going to be down this morning. It's already super bad with RSI at 30. I'm going to get rid of RSI. We don't really need it. So let me remove all studies. It's pretty obvious that price action is bearish this morning. So you don't really need RSI to confirm that. But I'm going to close these at 36 each. I originally got paid 35 to open each one. So take a small $6 loss on it. If it gets filled at that price, obviously. Not guaranteed. And it looks like we're continuing to head on down, so we're going to have to take a little bit bigger of a loss, maybe get these at 39, 38, somewhere in that range. Hopefully. God dang it, Robinhood. Why do you have to do me like this? What's wrong with Apple and tech stocks? They're falling because interest rates are going up right now. Whenever interest rates go up, that means that growth is going to slow down. And since a lot of valuations for tech companies is based on future growth, that ends up discounting the price of their stock. We got filled. Thank God. Okay. All right, so I'm out of that trade. Take a small loss on it. closing option. Whoops. Closing options alerts. Premium 101. Premium. Just cut losses on the 379, 380 to 386, 387. SPY Iron Condor. This one expires today 1/5, and I closed them at 40 each. All right, and they are headed up in value as SPY comes down to 397.8, which means that the put debit spreads that I opened luckily are gaining value, so made the right choice there, which is good. They're trading at 77 each now. I still think that they should be priced much higher. The bid ask on this is kind of wide at 70 versus 88. That means the liquidity for this option is not the best. I guess since the strike prices are getting so far away at this point, it makes it harder to get in and out of the trade. Like the further out of the money or in the money an option is, the less people are trading that option. So given that the bid-ask spread is between 70 at the bid right now and 88, so you have a 20-cent bid-ask spread. Let me check Aries and get their bid-ask, because Aries always has much tighter bid-asks than you can get from Robinhood, but I have a 90-day restriction going on with Aries that I still have yet to fix. One day I'll get this fixed, but remember this device, please. And then I got a two-factor authenticate. All right, so 054046. Did interest rate chances increase because of based on the Fed futures? Yes. Exactly. If you go over to the FOMC watch tool, it shows that the odds of a 75 basis point rate hike went from 30.3 yesterday to 43% after this new jobs data came out. But this trade definitely seems to be in the bag, making 360 on it at the moment. And the momentum just seems to be down today, to say the least. So I'm going to hold this one for right now. Maybe if we go up another couple of price levels to like 381.39, I might want to close. So let me get rid of this. Cancel this alert and replace it with a 381.39 price level. I'll still be at a profit, I'm sure, for the trade, but I'd like to retain some of my profit. So crosses above that level, I'll exit. For right now, definitely headed down. The bid is at 70, ask is at 80. I'm going to see what Aries will quote me for the same trade. And this will give me a better sense of what the bid ask is. Do you know how to use Fibonacci? Yes, I only use Fibonacci on larger time frames. So like the Fibonacci, the red line that you see here is based on a Fibonacci that I used on the 5-year time frame going from the COVID bottom to the peak of the bull market. So I took a very long-term, I guess long-term, you could even go as far out as, the max chart and use the bull market starting in 2008 all the way up. Then, of course, you'd get different price levels. But I think the longer your time frame, probably the more significant the price level is, because more people probably pay attention to the COVID bottom to the bull market top than they do, say, the bottom in June of 2022 versus the top in August of 2022. What's going on with the UVixie calls? I haven't really checked on that. I think they're still at a loss. It's trading at 665 right now, so no major pop in the VIX going on at the moment. I do think if the odds of 75 basis point rate hike goes up in the next few weeks on the new data that's coming out, we'll probably get a pop in the VIX. I only have till January 20th for my expiration date, which is kind of what worries me. I could roll it out to maybe February 1st, maybe the next week out, somewhere around there could probably help me. How much do you think the API report is going to affect stocks next week? API? I'm not sure what that one is. Let me see. I'm not sure if you mistyped and you mean CPI or if it's actually API. Let me see next week's data. Don't play the VIX. It no longer reflects market sentiment. It does. It's just that UVIXI and VIX trade separately recently. It's very strange. There's been some market manipulation, like actual convictions of market manipulation with VIX and UVIXI, which makes it a lot harder to trade VIX. I think it was Barclays and some other bank were accused of manipulating the VIX. So that makes it that much harder to trade. But my assumption is that we're going to go up to 25.50 at least over the next couple of weeks. So I'm trading UVIXI because that's the only product that we have to trade the VIX. We can't trade VIX itself, unfortunately. The only thing that we have as retail traders is UVIXI or VXX and all of the other leverage volatility indexes. I really wish, like, it would be the easiest thing to just buy VIX at like $20 and then sell it at 22 or 25, right? But we don't have that opportunity. Yeah, CPI. Wait, you can play VIX options? Just plain VIX? I know you can play the futures. I didn't know that VIX itself had options. You can play UVIXI options, but I didn't know that you could play just plain VIX options. Really? I got played. How can I play? Can I do it on Aries? Let's see. VX. Continuous contract. You used to trade it? Huh. It doesn't show the options available on Trade Aries. It's there on Thinkorswim too? Damn. I've been getting played this whole time. Let's go to Thinkorswim, the trade tab. Yeah, they have options on the VIX. Huh. Maybe I should start trading with Thinkorswim. That might be the best option for us. Don't know about Robinhood. Yeah, Robinhood definitely doesn't offer anything like that. IKBR. I've been playing myself by getting UVIXI and dealing with the price manipulation. Is it on Aries? Is it ticker VX? Let's see, VIX. VIX Volatility Index. Yeah, there's the options button right there. Really? I guess I'm just stupid. You learn something new every day, right? I need to move my money over to Aries and get rid of this 90-day restriction. I did not realize that at all. It's so shocking that like Robinhood is the most prevalent retail trading platform out there, but they don't have every option available to you. Anyway. Predatory, huh? Almost seems predatory. My friend says it's time to go full force on skew. I like trading UVixy myself for downside leverage, but you could definitely use skew. Tech stocks are going to hurt worse whenever interest rates go up versus industrials and companies that don't need to borrow money in order to grow their business. So QQQ will likely drop more than what you'll see from DIA or the Dow Jones. So skew isn't a bad idea, but you have to think about it this way. Are you the last person getting into this trade? Because if you're the last person getting into Tesla whenever it was trading at $1,200 pre-split, then you're probably not feeling really good right now. So you have to see if you're either the first in the trade or the last in the trade or somewhere in the middle. With QQQ, it's already fallen a decent bit, right, from $396 down to $261, so you are getting in a bit late, but is this the end of the sell-off is the question that you have to ask yourself. If interest rates continue to go higher, then I would say no, because higher interest rates means that tech companies' growth will slow down. But if there's compelling evidence that we can slow down the interest rate hikes to 50 basis points like the Fed proposed in the last meeting, then it's probably going to be neutral because it's already priced in that we're going to get 50 basis points. Not a fan of Robinhood policies. They gave me 90-day restriction when I first started. Won't be off until late February. Yeah. Robinhood is very... I don't really know how to put it. Predatory, I would say. They try to democratize finance and investing, but at the same time, not so much. Anyway, let's go back to finding the bid-ask on SPY with this put debit spread. That's what I was originally going to Aries for before I got sidetracked. I bought a 383 put. I sold a 382. If we check out the order, the bid is 75. The ask is 80. I still think that there's more than an 80% chance that this trade works out. We are, I guess, somewhat close to it. We're only 0.5% away from trading at 382. But the data this morning tells me that we're going to get a decent sell-off because it was very unexpected for the jobs report to come in as hot as it did. Although the caveat there is that there is some seasonality to it, with it being December. More spending in December means that you have to hire more people to sell the goods and services. So not exactly that bad. I guess you would have to look at the previous year and compare. Let's actually do that. If we go over to the economic calendar again, look at the ADP report. Yeah. Well, if you're buying into skew, that means that you think that QQQ is going to go down. So that's why I was talking about QQQ and how you might be the last one in. Let's look at the charts for ADP non-farm. How does the economic calendar look for next week? We'll look into that after this. But I want to look at the last 2 years of data in the month of December is what I would like, preferably. We could go back to COVID when we had a huge drop of employment. But let's see. So the latest data, 1.5. I wish they would make it to where it's American dates where it would be 1/5/2023 instead of 5/1/2023, but let's check last report was 775 for the month of December compared to 500 the month before and 500 the month after. So there was about a 50% increase there. If we look at the year previous to that, there was 78,000 jobs lost versus 304,000 jobs gained and 195,000. So last year there was definitely some seasonality effect. Let's check pre-COVID too. 199,000 jobs added versus 124, and the month after was 209. Interesting. And then 2019, 300,000 added, 263 the month before, 197. So I do think that there's some seasonality to December. And it makes sense, like, fundamentally, that whenever there's more sales, there needs to be more people working. So I think that's a caveat here with the non-farm employment change coming in so hot. Maybe the analysts that were predicting such a low number weren't anticipating that. I'm not sure why they would exclude it out of their predictions, but who knows? The economic calendar for next week, let's look into it. So for the end of this week, just to show y'all what's going on, tomorrow, today, I don't think we have any other major news. We had services PMI come out at 9:45 a.m., 44.7 versus 44.4 expected, and down from 46.2 last month. So that means that purchasing managers are being more pessimistic about the economy, which is not a great sign. That confirms the recession fears. But it was better than expected, so that is kind of a good thing. So we might get neutral price action based on the PMI data that just came out. And car sales, not as relevant unless you're looking to purchase the car yourself, but they were down in the month of December from 3.1 million in November to 2.8 million. So about 10% less car sales for the month of December. And then tomorrow we have manufacturing payrolls, average hourly earnings, so that'll show you wage inflation. It's important. The unemployment rate is coming out tomorrow. That's the big event for tomorrow morning at 8:30. So we might trade around that. I think that's based on the current data that we just got. I would think that, I mean, you could just look at, what's it called? You could look at the continuing jobless claims, and you could probably cipher that out to figure out what the unemployment rate is going to be. We might be able to do that later, but I want to get to your question on looking for the data next week. Definitely going to be the bigger report tomorrow, unemployment data. More employment data from the ISM. Manufacturing PMI is coming out at 10 in the morning, and that's pretty much all the big events. And then you have a Fed member speaking for like the first time in a few weeks, it seems like. Seems like they've been taking their time off for the holidays and haven't spoke much, but it'll be interesting to see what they're talking about after this new data came out. With the jobs report coming in so hot. But next week's data, we have consumer credit, don't really care. Nothing in the beginning of the week, so we could have a very flat market unless the data for the end of this week is just so bad that we continue to sell off as people digest the news. But I would think Monday through Wednesday, we're not going to trade that badly in either direction. We have core CPI coming out on Thursday, so that'll definitely be a big catalyst, especially since the beginning of the week is so dry with no major data. But we have core CPI, we have CPI itself. The estimate right now is 6.7% versus 7.1%. Hard to say where it's actually going to come in at. I would think for the month of December, since there's more sales, more demand, CPI would probably be worse, but we'll have to see. Real earnings, we have Fed budget balance, Michigan economic report coming out Friday. That's one of my favorite reports personally, but nobody else really cares about it. Yeah, we only have 2 major events next week, so it might be a pretty slow week for January 9th through the 12th, but I do think that Fed Chair Powell is scheduled to speak sometime next week. I don't remember the date. If somebody remembers the date, that would be great, but Thursday and Friday, definitely expect some volatility. From Monday to Wednesday, not so much. Okay. So I wanted to look at the employment data that just came out and use that to figure out what the unemployment rate is going to be tomorrow, and we'll take a swing trade on that. Because that'll definitely be the big event for tomorrow. So if we look at the jobless claims, we want to look at the continuing jobless claims. I think over the last month, I think that's how this is reported. The unemployment rate is reported once a month, I believe. Let me double check just to make sure. Always want to double, triple check. Make sure our analysis is on point. Given that all this employment data has already come out, though, I think people might already jump to the conclusion that the unemployment rate is going to come in high tomorrow. But you also have the algorithms that love to trade around these big events, which kind of exacerbates the issue of sell-offs and huge rallies based on these economic data. But we're looking at continuing jobless claims versus unemployment rate. So if we look at the last year, the jobless claims for the month of December, actually, let's see. Well, I wish the default timeline was 1 year instead of 5, but last report was 12/2, so this is a monthly report. So let's look at the last month of jobless claims versus the previous months. Or, yeah. 1/5, 1, this is 12/29. So we want to go back to the month of December. So we had 1,600 jobless claims. I mean, you can just look at it from the chart perspective and see that the total jobless claims is worse than the month previous. So that means that unemployment is likely to be slightly higher or significantly higher. How the markets interpret that is going to be tough, because all of the evidence that we've seen for the job market has been showing a hot labor market, but this is going to be conflicting evidence against that. Maybe we trade in the other direction based on that. Possibly we just trade flat. And it's not major news at all because we already know. So I think best course of action. The problem is, though, that if unemployment comes in higher tomorrow, then that feeds into the recession fears that are already spreading throughout the market. So it could be a double negative, to where if it's a good report, then it's bad. If it's a bad report, then it's bad. But given that all the employment data has already come out and it's already shown such a hot labor market, and this is conflicting evidence against that, I think we reverse. So I want to take a trade to the upside, probably do a call debit spread. I think we go above, I think easily we go above 381. Let me see how much that trade cost me. SPY, call debit spread for 381. And that's only one price level away currently. I usually like to open my swing trades at 3 o'clock, but I'll try this one. So it'll be a call debit spread for tomorrow's expiration date, the 6th of January. And I'm assuming that will be above 381. It's not bad from what I'm seeing so far. There's about a 1-to-1 risk-reward ratio based on the max profit. It's not my favorite trade in terms of risk-reward ratio. So I probably won't put a lot of money down on this trade. Maybe just $200 or $300. So like 5 of these, they're going for 50 cents at the moment. All right, so I open that, posting it to the premium Discord, and I'll show you when I close. So new options alert, P1F. Just opened a new SPY call debit spread. This one expires tomorrow. Expiring 1/6. I opened them at 50 each. And I'm assuming that it's going to be above 381. So the analysis for this one, unemployment rate coming out tomorrow at 8:30, likely to come in higher than expected. Actually, let me see expectations. I didn't check expectations before I opened this, but I was comparing it to the previous month. So tomorrow's data, unemployment is expected to be the same that it was last month. Okay, expected at 3.7, when the continuing jobless claims seems much higher for the month of December than in November. Given all the jobs data that came out this week, coming in hot, this should change sentiment on the labor market and potentially send us up tomorrow. After the report, obviously. So that is the analysis for that. Looks like SPY just went above 381.39, just barely above it, and then came back down. That's interesting. Very large candle out of nowhere. No news that I'm seeing right now. Let me recheck the... I imagine RSI is still below 50. Yeah, it's creeping up to 50. So maybe we get a reversal. There's no news to send us in a reversal, but Let me check if there's any news coming out on investing.com. News, latest 28 minutes ago. So there's no news coming out. So there's no real reason for the markets to pop just now. A lot of volume that came in suddenly. Interesting. Very interesting indeed. Alright, let me zoom in to make this on the right side. God dang it. Ugh. Alright. I wish that my sideways scroll was adjustable. But currently I'm up 300 for this trade for the put debit spread, assuming that we're going to be below 382. Let me shrink this down. It looks like we got rejected by 381.81, but the price action could be turning around. Right now we're still below 50 RSI, so we're still bearish. This could have been in some sort of overreaction based on a bunch of volume flooding in suddenly. I'm not sure where that volume came from. Usually there's an event to spark the volume, but we almost had as much volume in the last 5 minutes as we did on the opening bell. Very strange. The call debit spreads that I opened are already up a tad because of the small rally that we got out of this. I also want to open a iron condor on the assumption that we could trade flat with tomorrow's data. I usually set 3 strike prices, 2 to 3 strike, or not strike prices, price levels above and below. So maybe 377, 376 if we want to be comfortable. And then for the upside, right now we're trading at 380. If we want 376 and the equal distance, we'd go 384, which is a lot of price levels away. But let me see how much that's paying right now. All right, so we do 384, 385 for the calls. We already get 33 credit from that. Jesus Christ, that's a lot. And then for the puts, we're getting another 25 cents. So we're getting a crap ton of credit for this trade, which I like, but also means that it's less likely that the trade is going to work out. So January 6th expiration date, tomorrow, Friday. I'm getting a total of 58 credit to assume SPY will be between 376 and 384. I like that trade. And I'm more confident in that than going up on the report tomorrow, I feel like. But I don't have to take on as much risk because the risk-reward ratio is so much better. Like, I can risk just $200 for this trade and make up to $300, which is a really good risk reward. If I risk $400, then I get $600 in credit. I really like that trade, actually. I'm going to try to get it at 58. Looks like the bid just moved up slightly. I'm going to try to 59, I guess. Hopefully we can get filled, but we'll see. Nope, no fill on that price, 59. What's moving on SPY? No news right now. No news, just price action probably. Lots of volume to buy in that 1 5-minute candle. So people might just be following the money. Not getting filled at 58 either for this iron condor. That's annoying as hell. I guess I'll take 57, but I know Robinhood is screwing me over with these prices. I got filled at 57 for that iron condor. All right. New options alert. P1F. Just opened a new SPY iron condor. This one expires tomorrow again, January 6th at 57 each. And I'm assuming that it's going to stay above 376 and below 384. Okay. Bad unemployment rate tomorrow could also be taken as a sign to confirm recession fears, which have already been baked into the market over the last few weeks. So maybe we trade flat tomorrow. Now, tomorrow is Friday. So with Fridays, you're going to get a lot more price action because there's more options expiring, which means that market makers are going to be pushing and pulling the market in different directions to get everybody out of their trades. That way they don't have to buy and sell the hundreds of shares if the options get exercised at the end of the day. So you're going to see a lot of price action from that. Iron Condor is usually not the best fit for a Friday, but we'll try it out. Okay, so that's all the trades that I'm thinking of so far. Maybe we'll come up with one more by the end of our session, but I want to log my trades, make sure that I log them. Otherwise, usually if I don't log them, I do a lot worse. So let me head on over to my neat little spreadsheet. I haven't closed the put debit spreads yet. I want to close them soon, but haven't reached the price level that I was looking for at 3 to 180 or 3 to 139 yet. So the gold we still have open. The TLT we did close today, and I closed that at 15 each. 0.15, so that was a $300 loss, which brings down my average loss to 156. My average win right now is 125. And let's see, put debit spread. We still have that one open. We took profit, or we cut losses, small losses on the Iron Condor today. This one we closed ourselves and did not let it expire. I guess I maybe should have held that open. Let me see what price it closes at. Iron Condor. Post a spreadsheet into the Discord. I think there's... Oh, yeah. I need a... You're right. Will do. Okay. Let me make sure... Closing options alerts over here. Me and Roddick. Yeah, me and Roddick should just team up and make like the ultimate spreadsheet. I should actually hire Roddick to help me make my spreadsheet or my app that I'm making. Maybe he can give me some better ideas than I have for myself. Just cut losses on the call credit spread. That was yesterday. Where is the Iron Condor? I close them at 40 each. Okay. 0.4. All right. So we got that. We opened some new trades today. I think it was like 2 new trades if I remember right. New options alert. So we're searching for new trades. Today I opened 2 trades. So trying to follow Roddick's advice and not overtrade. Just opened a 3D 1. Whoops, I did not type those strike prices right. Whoopsies. You'll figure that out if you join my premium Discord. I'm not a great typer, which makes it a lot harder. SPY. This is a call debit spread. SPY call debit, which is a bullish sentiment trade. Expiration is tomorrow, 1/6. Strike prices that I chose were 380, 381, and I opened 5 of them at 50 cents each. And then finally, the last one that I opened was the SPY, both calls and puts. Iron Condor, which is a neutral sentiment trade type. And the expiration is 1/6, same as the call debit spread. 1/6. Strike prices I chose were 375 and 385 for the longs, and then 376 and 384 for the shorts. I opened 10 of these for 57 credit each, and I have yet to close these trades, so don't have to type in the debit. I do have to type it in the right place, would be neat. But yeah, that's all the trades that I've made. Up a whopping $150 for the week. But after we close this put debit spread, we should have significantly more profit added to the week. I'll make my Patreon ASAP. I wouldn't do it on Patreon, honestly. Patreon is a mess. That's why I switched over to the Discord system. It's a lot easier to navigate than the Patreon system, because with the Patreon system, you have to sign up on Patreon, and then you have to bring the people over to Discord. It's a mess. That's why I'm only doing it on the Discord now instead of doing it with Patreon, because I would have a bunch of people sign up with Patreon, and then they would never make their way over to the Discord. So they would just pay $20, $30, whatever the price was at the time, and then not actually get the benefits, which was really freaking annoying on both ends. Their end, obviously, and like wasting their money, and then my end and frustration and not getting them what they paid for. Anyway. All right, these are trading at 79 cents each. I still feel like they're undervalued. So annoying. If SPY is trading at 380, I would expect these to be going for like 85. And that's what the bid is, or the ask is. So I feel like the sellers are right on this trade. But the bid is 70. Like, why are y'all only bidding 70 for this trade? It's ridiculous. It's probably 75 on Aries if I had to guess. I'm almost tempted to close it just so I don't have to stress about it for the rest of the day, but at the same time, I just feel like it's not going for the value that it should be. Let's compromise and say 78. Somewhere in the middle there. So the buyers think it's worth 75. I think it's worth 80. Maybe we compromise in the middle at 78, and hopefully we get filled, but with Robinhood, probably not a guarantee. We're dropping now. All right, let me raise my price to 80, see if we get filled. Just let's try it out. Nope. Of course not. Stupid Robinhood. Always ripping me off. There we go. Sweet. We're finally out of that trade. Don't have to stress about that for the rest of the day. And that will be my last trade for the day. Unless we can find another opportunity, but I feel like I've used all my mental bandwidth for today for trading. Come on now. All right. Closing options alert. Premium 101. Premium. Just took profits on the 382, 383s. Buy, put debit spread. This one expires today. 1.5 at 80 each. All right. That is a profit. Whoops. 382, 383. Originally opened those at 40, so 100% profit there. Doubled my money. Originally opened at 40 each, which is a 400 total profit. I will take that any day. So let me type that into my spreadsheet, and that will be the end for today. Drive. If anybody knows how to make this smaller whenever I open it, that'd be great too. But put debit spread, that was this trade right here. Close it today, and I closed it. It did not expire. And we closed them for 0.8. It's saying that I opened them for 41, but the log says I opened them at 40. Who's lying? Oh, I'm lying. 41 each. Yep. So $390 of profit instead of 400. So for this week, we still got one more day left, obviously, but I have made $548. Hopefully tomorrow we make some more money, but my goal for each week is to make about 400 at least. The options account balance is currently 7,600, so hoping to make 400 over 7,600, about 5% a week. That is a bit of a stretch goal, but hopefully I can sustain it by making better decisions each day. Trying to improve by honing in on my craft. I think my craft really is predicting economic data. So I'm going to focus a little bit more on that. Usually swing trades will provide you with better risk reward. Usually I get like a 1-to-1 risk reward, or a like 1.5-to-1 risk reward. So maybe we focus on that a little bit more, and hopefully that'll improve our trading. Anyway, it's frustrating that Tesla went to 115 almost pre-market and now down to 108. Yeah, Tesla is just a super volatile stock. It'll move big in both directions. So I mostly avoid trading Tesla options myself, but to each their own. And I will head off, and I'll catch y'all tomorrow at 9:30 in the morning. See you, everybody.